Hello everyone. Whenever we discuss short-term investment among our friends and family, we generally hear that short-term investment does not give good returns. Moreover, some say there are hardly any good short-term investment options. As a result, we get suggestions to opt for long-term investment options like fixed deposits and the stock market. But what if I tell you we can get fixed return of 9 to 11% via the short-term investment? Yes, you heard it right. You can get a fixed return of 9 to 11% by investing in senior secured bond by Wint. That too in a span of 1 to 3 years. And can you guess the minimum investment amount? It is just 10,000 rupees. So by investing in these bonds, you will not only get better returns than FD, beat inflation, but it is less risky than the stock market. But, what exactly are senior secured bonds? Does Wint guarantees a fixed return? Are there any risks involved? Well, there are. In this video, I will explain what senior secured bonds by Wint are and the risk involved. First of all, we need to understand what bonds are. Whenever a company wants to raise money, it has two options. The first option is to sell stocks. With this option, the company can raise money, but it loses a certain percentage of ownership. We all know IPOs, right? The second option is to raise money by loan. A company can either approach a bank for a loan or can issue bonds. You're technically lending money to a company when you buy a company's bond. Suppose you buy a XYZ company's bond for 1 lakh rupees. After a specific time, you will get back a principal amount, that is 1 lakh rupees. Plus, you will also earn an interest on principal amount, which was already pre-decided. Now, there are two types of bonds. One is the secured bond and the other is the unsecured bond. The difference between these two bonds is straightforward. Let's assume an XYZ company wants to issue bonds worth 100 crores. If these are secured bonds, then the company will need to keep assets worth 110 crores. If these are unsecured, then there will be no collateral. So among these two bonds, Wint issues a type of secured bond, that is senior secured bond. Now senior secured bonds not just have a collateral backup, it gives its buyers the first right to receive their money from the collateral if the company defaults. Now let's know about Wint, the platform issuing senior secured bonds. These bonds were very risky for retail investors at one point, and it needed vast sum of investment, that is 5 lakhs, 10 lakhs and so on. Wint have made this bond accessible to retail investors with minimum investment, that is 10,000 rupees, and it takes a complete effort to educate its investors about the risk involved and their mitigants. Due to such an initiative, Wint, the startup, is backed by India's fintech leaders like Zerodh's Nitin Kamath, Kunal Shah, the founder of Cred, Vasant Kamath, founder and CEO of Smallcase, and many more. Although Wint have made bonds very affordable for retail investors, the question is, how does Wint come up with such bonds? First, the bonds on Wint platform are issued by NBFCs, non-banking financial companies. These NBFCs are engaged in the business of loans and advances. For example, some NBFCs deal in property, gold, or vehicle loans. The loans that the NBFCs have given are their assets, and if they want to raise more money, they issue bonds. What does Wint do over here? In India, there are roughly 3,000 NBFCs, out of which Wint has brought bonds issued by 13 NBFCs. They also have 15 NBFCs on their radar, which they constantly monitor. So what are the risks involved in Wint senior secured bond? Let me be very clear. Senior secured bond by Wint are not entirely risk-free. On the contrary, it has some elements of risk. Now what are these risks? Let's hear it from co-founder and chief investment officer of Wint, Anshul Gupta.
The bonds that NBFCs issue are definitely not risk-free. There are various risks that an investor must be aware of before taking any exposure in any bond which is there in the market. The first risk is credit risk. Now when you are investing in the bond, you are essentially giving money as loan to the borrower, to the entity which is issuing the bond. There is a possibility that the NBFC may go bankrupt and is unable to repay back your money. Second risk which is there is a liquidity risk. Let's say you are investing in a bond which has a tenure of 2 years. Now theoretically, bonds are freely transferable, which means if you are investing in a bond, tomorrow you can sell to your friend. But in India, bond market is in its nascent stage, which means secondary activity is slightly limited. It's not as liquid as the equity market, which is there, where you can easily buy and sell shares in a fraction of a second. Hence, only invest that much amount which you are comfortable holding till the maturity of the bond. Third risk is the fraud risk. What if there is a fraud either in the NBFC or the collateral which is given as security in a senior secured bond?
So these are the risks involved in senior secured bonds. Now how does Wint mitigate this risk? The process of mitigating risk starts from the very first step of selecting an NBFC for investment. Wint does not randomly subscribe to any NBFC bond. Instead, it first studies, scrutinizes NBFCs, and then selects only those NBFCs that match their criteria.
Things like how many existing lenders does the NBFC already have? Having multiple such lenders gives a validation that entity has been able to meet the filters, due diligence of all the existing lenders. Secondly, we also look at which are the equity investors backing the entity. Thirdly, we look at the systems, processes, operations of the NBFC, and only those entities which are meeting our benchmark get onboarded. And lastly is the analysis of the financial health of the NBFC, and within that a very important parameter is the leverage. Typically most of the NBFCs that we onboard, they have a leverage of at max 4 times, and since we are giving debt to the NBFC, lower the leverage of the NBFC, lower is our risk.
Wint also ensures that the senior secured bond holders have the first right and exclusive charge on the underlying security. Now what does this mean? It means the collateral assets, that is loans, are exclusively kept for specific bonds. All the loans are earmarked for specific bond transactions. It can't be kept as collateral for any other transaction. The third significant step for mitigating risk is amortization. Now let's assume an NBFC has issued a senior secured bond with a maturity period of 30 months at an interest rate of 10% XIRR, and you have invested 30,000 rupees. Now because the senior secured bond is an amortization bond, your 1/5 of the principal amount will be repaid after 1/5 tenure. That means after 6 months, you will get back 6,000 rupees of your principal amount. You will continue to get 1/5 of your principal amount after every 1/5 tenure till the end of the maturity period. And what about the interest rate, which is 10% XIRR? Let me tell you that an interest rate of 10% won't apply to your entire principal amount throughout the maturity period. That means once you have received 1/5 of your principal amount, that is 6,000 rupees, then the 10% rate of interest will be applicable on the remaining principal amount, that is 24,000 rupees. The same thing will happen when you receive your following 1/5 principal amount, and the interest will be applicable on the remaining balance. Now you must be thinking, why senior secured bonds have risk mitigating tools like amortization? What's the benefit of it? Well, Wint CIO Anshul Gupta has the answer.
We know Diwan Housing a few years back defaulted on its borrowing. Now Diwan Housing had issued 5 years, 6 years tenors worth of bond, and most of the bonds were bullet bonds, which means let's say an investor was invested in the bond for 4 years and was expecting repayment at the end of 5 years, but Diwan Housing defaulted. So the entire money was stuck in the bankruptcy, even though for 4 years the entity was performing well. Had the bond been an amortizing bond, so when the bankruptcy took place after 4 years, 80% of the money would have been already repaid to the bondholders, and only a small amount would have stuck in the bankruptcy proceeding. Hence, amortization significantly reduces risk for the bondholders.
The other risk mitigating step is having over collateralization. As I said before, if an NBFC wants to raise 100 crore rupees, it needs to have collateral with a value of over 100 crore rupees. Wint lists bonds with a collateral value of 1.1 or 1.2 times the bond value. Over collateralization is done because there should be enough margin of safety in the collateral in case of default, and a significant portion of money can be repaid to the investors. And last but not the least, Wint invest in all the bonds listed on their platform. Skin in the game is a fascinating concept, and Wint truly believes in it.
To ensure that Wint has a skin in the game, Wint invests in all the bonds that are listed on the platform. Typically, the investment size is 2% of the bond amount which is being brought on the platform. This incentivizes stakeholders within Wint that whatever bond we are bringing on the platform is a bond where we would personally feel comfortable investing in.
You have learned so many things about senior secured bonds and Wint. So now, let's come to the conclusion segment. Is the senior secured bond by Wint risk-free? The answer is no. But is it less volatile than the stock market? Yes. Does it give better return than FD in the shorter period? Yes, it does. Although I'm not registered under SEBI to give any kind of investment advice. But in my opinion, you should not consider senior secured bonds as an ideal replacement of FD and stocks. We should invest in senior secured bonds to diversify our portfolio. This move will ensure you a certain percentage of fixed returns and reduce the risk. And don't forget, we should invest in senior secured bonds only after calculating our risk appetite. So guys, remember these points. Minimum investment of 10,000 rupees, fixed return of 9 to 11% in a short period, and risk adjusted returns. So what are we waiting for? Let's head to Wint and start investing. Hey guys, hope you like this video. Please do share and let us know your opinion in the comment section. And for more such interesting content, please subscribe to Nutshell. Till then, keep on watching.